Hello, this is Joe Pryor, the virtual real estate team in Oklahoma, and I want to talk today about insuring an investment property properly. And, I've had some questions come to me from out-of-state investors. They're going, well, I don't understand why your insurance is so expensive in Oklahoma. Yours are like $860 a year. And yet I'm looking at these properties in Florida that are $28 a month. So what's the deal? And normally I tell them, well, it's very simple. It's how you insure a property properly that's going to determine what the cost of it is going to be. And it depends on how much you want to risk. So, for instance, if you want to get your insurance costs down, you don't do replacement value, you do actual value. So let's say you buy a property at $200,000 and the insurance company says, well, actual value is $200,000. So let's say 3 years, 4 years down the road, you have a total loss and it's $250,000 to replace the property. Well, you're out not just your deductible, you're out $50,000 because all they're going to pay you is the actual value. For a little bit more money, you can do replacement value. So no matter how high your property goes up, that's what replacement value is. It takes care of the whole thing. And we believe that's risk management. $50,000 out of pocket in 3 or 4 years when something that bad happens is not a really good idea. Now, the second thing to reduce your insurance would be on the deductible. So normally we're recommending people give $1,500 to $2,500. Normal loss in Oklahoma is with a roof, because of hail damage or something like that. Our insurance companies work very well with our roofers, and so very often I can get that with a deductible like that down to $1,000 expense for a brand new roof. Well, if we have a $5,000 deductible or higher, then that's that much more money coming out of your pocket, and that really is killing your return on investment. Now, the third thing is liability. Now, this is going to vary from state to state, and in Oklahoma, we're recommending $1 million per home because nobody sues for $3,000, do they? If they trip and they fall, there's suffering, there's pain and suffering, and therefore it's not going to be for a small amount of money. And we want to insure you for $1 million. And we think $500,000 is minimum. Now, I also own properties in Florida, and getting it over $100,000 is really tough down here because, it's expensive. And so with that in mind, if you want, say, $300,000, you're going to pay a lot of money for that. And that's not fair. But that's the difference in state to state. So if you're sued, we want to make sure that you're not at $100,000 or more in terms of losing a court case. Now, this may not happen, but things like this do happen. Now, the fourth thing about insurance is what's called loss of income, and this is also an expense. And so what that means is, let's say you have a fire and your tenants have to move out for 4 months. Well, you're still expected to pay your mortgage. And so what happens here is that the insurance company gives you a payment in order to help you pay for your mortgage on those 4 months. And this is typically written either for 6 months or for 12 months because total losses can take more than 6 months. And so when we insure a property and recommending insuring your property in Oklahoma, yes, if it's your desire to get it down to as least amount possible and you want to take a high amount of risk, that is your choice. That is not our choice because we want to make sure that your risks are minimized, your expenses are minimized, and your return on investment is at its maximum. So paying $800 a year for the things that I just mentioned, I don't think is a great financial sacrifice. In fact, I think it's a financial benefit.